Hello, everybody. Welcome to another edition of Three Stocks. We'd buy, three we'd sell. Part of a regular schedule of many other live streams covering all sorts of markets. So please subscribe to @TheStopHunter, and you'll be notified when that content goes live. So today it's all about stocks. And how does it work? Well, I scan stocks on various criteria, put together a short list, hone that short list in further for you guys to have, like I said, three stocks that could be worth buying and three that could be worth selling. Whether that's buying puts on those short trades, that's up to you. And also, I'd say do your own due diligence on these stocks. Don't just jump in off the back of my analysis. There's more to it than just that. Remember, these are just ideas to get you going. And with that, why not? Let's get started right into that shortlist. So today's shortlist, a bit bigger than last week's. It was about 12 stocks last week, got 24 this week, and I've broken it down into this symbol distribution by sector and industry. Also important to note that when you're picking winning stocks, you don't want to be hindered by the sector. So always check out whether the sector's been performing or underperforming and how your stock fits into that sector. Now, today's list, 9 stock sectors, as you can see up there on the left. Bit of a range from everything. The biggest one, electronic technology, got retail, tech services, industrial services, producer manufacturing, health, technology, and a few other smaller ones there, consumer services, non-durables and durables. But then we flip over to the right-hand side, we break that further down into 16 industries. Now, what are they? Well, we got 10% there with semiconductors. Now we're talking about industries, semiconductors, a bit more bumpy at the moment compared to other tech stocks. What else have we got? Motor vehicles. That's probably including like EV stocks, some major pharmaceuticals in there, internet retail, movies, entertainment, packaged software, computer, electronic hardware and equipment. So a bit of a good old mix there. So let's actually have a look at those 24 symbols. Now, you're wondering what order I put them in. I'm not going to tell you that until we get into those 3 and 3, order mean buy, sell. But let's just go through that list. We got Dell, Intel, IonQ, Transocean, Meta, Carvana, Adobe, DraftKings, Miniso, General Electric, AppLovin, Eli Lilly, Technip, Polestar, VF Corp, Walgreens Boots, Solar Edge, Enphase, GameStop, Etsy, Lucid, Plug Power, Chewy, and C Limited. Now that's the 24 on the shortlist, and we can see how they've all been doing over the last year of trading. The range from up the top there, MNSO, a 385% gain nearly there, followed quickly by another IonQ, 250%, all the way down to the bottom, GME, down nearly 40%. So a bit of a range there. So what have I reduced it down to? Well, let's start with the stocks that could be there for selling. And we're going to go with Solar Edge Technologies to start with. Now you can see the weekly Heikin-Ashi chart. We're going back to, way back to 2015 here on this chart for these guys. And you can see really it hasn't been a great story for them over the last year. And pulling back from those highs, let's just see how much that did fall. So if we go to that high there, Feb 23, so it's really been a miserable old time for them, down 60% nearly. Who are Solar Edge? Well, the clue's in the name. Renewable energy stocks, all into solar power design, development, EV charging, actually an Israeli company, but they've been hit by weakening US European demand, downgrades, and some fundamental issues. So it hasn't been, like I said, going well for them. And if we draw onto the chart now, we can see that nice line of support there, which is roughly around the $200 mark, and it broke on down there further towards the end of July. If we put on some Fibonacci numbers there, just to give us a better picture of the levels, let's drag that across. And unsurprisingly, that Fibonacci level goes straight through that $200 area, which I thought it might. Starting to slow down around about that 38.2% Fibonacci line where we're at now, which is $158. Let's just remove that so we can see a bit more clearly. See the next stop down, that next Fibonacci at about $100. And in terms of volume, we've got that arc at play all the way down. Really, there's a couple of points where it might slow down, but really, under $50, not an improbability there for the stock. So let's just focus in on the Renko charts for a bit of shorter term action. $3 block size here. Again, it's just going to illustrate the recent downtrend in the price action. We got signals at the bottom. Stochastics still short. Trend, this modified DMI that I use, still short as well. Let's draw on some Fibonacci's, see where it could be heading next. So we're at the lows at the moment, high around there in February. Where could we be heading next in terms of price action? Well, we've got this break under the 150 to that around 100 sort of area there in the price. Notice how quickly that fell there. No volume in between those sort of numbers there. Started to slow down a bit there, a bit more volume build up, but nothing under there. A very slippery slope down to like $9,600 and then down into the mid numbers, $50, $60, $70. So Solar Edge, our first stock that we would sell. Now, second one, you've probably heard of these guys. Type them in. Etsy, the online marketplace. Again, another not fantastic year at play, but look at that high there back in November of 21. I suppose COVID did help them as a platform, but down there nearly 80% so far. Let's draw on the Fibonacci's again. Go from that high down to, let's actually do it from that breakup. Let's call that the COVID breakup sort of area. And drag that across. And you can see next stop really downwards for Etsy, down into the early $30. There's a lot of volume here, mind you, which you can see from that trading action before the COVID sort of breakout. Then it shot on upwards. But yeah, it's not looking great. There's a big volume down there at those lows that we saw around about 2017. There's a lot of competition here for Etsy. It's struggled with a few issues, and it's not looking that great at the moment. Let's focus in on some shorter term price action on the Renko. There we go. What have we got? Let's bring that in a little bit. Let's get a bit more aggressive on the time frame adjustment. Let's remove that. Right, so what have we got? We got back to the high there in the February. Let's pull on the Fibonacci's. Again, we've got this low playing out at the moment. Volume-wise, volume at price, you can see a lot going through here, around about that 61.8 percent Fibonacci line. It's this box of action here between $100 and call it $85. It's slipped under there. You can see those points there, exposed, broke on down, stopping around these new lows, mid 60s. Next stop, it's $41, $42, and then down to about $30. So not looking very good there for Etsy. And our final one of the three bad guys, the ones to sell, we've got an EV stock for you. Now let's type that in. Polestar, you might have heard of them, ticker PSNY. Relatively new to the New York Stock Exchange, a global company. Now these are, I call them the posh Volvos. Volvo are owned by the Chinese company Geely, and it was actually a toss-up on the list here between which one I would put on, Lucid or Polestar. Polestar just picked it for me, just beat Lucid, even though Lucid also not doing that well. As you can see, it's been a downward spiral from those highs really since November of 21, and again, you know, from that point of control around $10, it just collapsed on down to about, well, just under 3 where it is at the moment. And you know, I don't like the stock still, but as you say, there's probably not much downside there. You know, $2, $1.50. So, you know, still something there on the bone to trade. I did think at one point Polestar were looking quite attractive, but like I said, fundamentally, downgrades, production issues, levels, numbers not looking good, and there's just so much competition in this field. You've got to be way better than the rest to survive now, and they're not looking that good. So let's focus in on some short-term price action on those Renko charts again. Ticker PSNY, let's put that on in. There we go. What can we see? Let's go from those February highs. Let's do it this way around. Like I said, downside numbers, well, they're a bit more easy to spot in the shorter term. 1 3/4, $1.25 maybe for the downside moves. You know, it's still a good gain. You get your aggressive risk management on there. The risk return's not too bad on a trade like that. You know, everything's still signaling bearish at the moment. So yeah, there you go. That's the 3 stocks to sell. So what about on the more positive bullish side? Where can we start? Well, the first one is another name you've probably heard of, and it is Adobe. They've been in a good recovery mode actually since this big sell-off, which started November 21, took about 2/3 of the price off, ended October 22 before we can now see this recovery at work, up 111%, all looking quite good. You know, for those that aren't aware, Adobe are a software company, do digital media, experience, publishing, advertising. We've all probably come across their tools, you know, on a business and a personal front. So let's have a look at some levels for Adobe in the longer term. Interestingly, the indicator down there just starting to turn even more bullish. Not a lot of volume where we're at the moment. Highs, like I said, around about $700. Let's remove that and we can see a bit more clearly. You can see this key Fibonacci line, $535, where it's playing at now, and that's where that double top formed before it broke on down, and that high back there in 2020. So it's going to be an interesting level, this one. Recovery has been good, and further upsides, I'll call it about $600, and then $700 using those round numbers, and if it can break that up, let's call it another round number, 800, just over to the upside. And focusing on the Renko, what have we got in terms of price action? You can just see the price pulling back a little bit. Lows in around September of last year. So let's take the Fibonacci's from there to the recent highs. It's seen just a bit back at the beginning of this month, and scroll out a bit. At the moment, we've got mixed signals, so it could be a buy the dip opportunity. This one just crossing down here. Trend still positive. Pullback, you're probably going to get a lot of noise around this $500 mark. There's a bit more volume building up. Here's a bit of slippage down there to that next key Fibonacci line, just under 400, 387. So that's your downside risk. Upside, you know, like I said, buy the dip opportunity, get through those highs, then it's up to 640, 650, and then possibly 680. So that's Adobe. Let's get into our second choice. Now I've got a couple more tech stocks for you here. Now the first one is ticker app. So these ones you might not have heard of. This is called AppLovin. Now what is AppLovin? Well, a software company develop mobile app tools development, so it allows the user to enhance, market, monetize their apps. And as you can see, they have had a bad run. Now this to me is more of a recovery type stock, maybe a good play for options traders out there. 93% fall in that price to those lows. Not great, but they have been recovering. Lows put in around January of this year. So far up nearly 400% this year. And if we put on the Fibonacci's for potential numbers, then let's bring that in with the volume as well. Most of it is in this zone up to $44, then very little above that. Probably another one of the reasons why it fell so quickly down there. So it's got to build support, I think, around about this $50. So we've got a bit of upside there before I think you probably maybe hit a bit of a slowdown in the recovery. And then after that, you know, we'd be focusing on $75, 90, early 90s, and then those highs back around $110, $116. So focusing again on the Renko charts. We got the lows in December of last year. Let's draw on the Fibonacci's. Let's pick the high. Again, similar shape to Adobe, just pulling back at the moment. What have we got on indicators and tools wise at the bottom? Yeah, stochastics looking short, trend up. So again, another maybe buy the dip opportunity. Not a lot of volume in there. First stop really is around $26 area. They got a key Fibonacci around $30, but like I said, not much volume in there, so you could have a pullback, you know, reasonable pullback down into there if this trade idea doesn't work out. But if we're, you know, being a bit more positive about it, then we would look for that buy the dip opportunity to take us back to 52 and then sort of $57 area. Right, last one, and it is another tech company, one you might not have heard of. And this time I'm going quantum computing, AI based. It's, you know, two very popular areas, especially for future thinking or future trading. They're called IonQ, and like I said, they are a quantum computing AI company. Do partnerships with people like SEPT', and you know, earnings fundamentals not too bad at the moment, but it's where they could get themselves into that I like the idea of. And they have been on a good recovery since, you know, Christmas of last year. up nearly 600%. I still think there's some upside to be had. You can see highs around $36. And if we scroll that out, see those Fibonacci levels, let's get rid of that. See, about the $20 mark is proving a bit of a stumbling or sort of pausing block. Again, no volume there. Downsides, $15, $11. But like I said, plenty of upside. Next key Fibonacci's at $23.50. Then those highs up to $35, $36. So like I said, from here, you've still got 70-80% of gains to be had. And in on the Renko charts, we take away. Let's draw on the Fibonacci. Let's go from, let's just do those highs to the lows. It's going to be a similar sort of story. Just not a lot of history there. Relatively new organization. Again, same sort of thing. It's at Fibonacci at 20. Key Fibonacci, look for 25, 30, and if it breaks on up $38 there, pull back. I would say look at that sort of area there for volume, which is roughly around $15.90, $16, and that next level, 38.2% Fibonacci line, just under $14. Maybe I'm just looking, just hypothesizing here, maybe a double top in play there, so be wary. That would take the price back down to those lows around about $6, $7. But we're being positive of IonQ, being that they're into two sectors that are the future of technology, quantum computing and AI. So like I said, upsides $24, $25, $30 and $38. So that's your 3 and 3 to think about. Hope you found today's list interesting. Like I said, it's pulled from a short list of about 24 stocks. Do your own homework around whether you want to trade them or not. Always have your risk management in place, your trading plan, follow that, and give yourself the best chance of winning at this game. So if you want more of this sort of stuff, we've got plenty more coming next week. Like I said, subscribe to TheStopHunter, hit that bell button, and you'll be notified when the content is coming out. We cover all sorts of markets, a lot of other content in on there. And I can see some comments in, one from Neil commenting on the Renko series of videos I produced. He's enjoyed them, and they're out there in a playlist for you to get stuck into as well. If you want to learn more about that analysis that I've done today, the Renko charts I've looked at, it's all in that playlist that Neil was talking about. Anyway, thanks for watching. Good luck with the trading, and I hope to see you again soon.